Joining us to talk about the market day, Barbara Doran from BD8 Capital Partners and David Ellison from Hennessy Funds. Mike, to start with you, declines, albeit only slight declines, and again, of course, yesterday, record all-time closing highs for all of the indices.
Yeah, the market mostly kind of holding in there, idling right near the highs. I do think the dollar strength was a bit of an undertow, and that was from the very beginning of trading today. And then also just little bits of something if you're looking to moderate your bullishness a little bit. You got, some suggestion from the president that China, we could take a hard line there. Not a real strong reaction, but it was out there. And then I do think that drag in energy, too. So all that stuff together, down 1/3% on the S&P 500 at a time when as I was just saying, short-term trader sentiment maybe got just slightly overheated. So we're moderating from there.
Barbara, what are your expectations for earnings, this earnings season as that gets underway this week? And could we actually see an earnings recession? Does it even matter?
I think that's the real question. Doesn't matter. I mean, the market is broadly expecting negative earnings for the second quarter, and yet it doesn't seem to matter. We're up 20%. Valuations are rich. But I think you've got two things. Obviously, the Fed, likely to ease in July and in the fall. And you also, I think it's interesting when you look at, not many companies have reported yet, but over 80% have beat expectations in earnings, and over 75% have beaten sales volumes, which is always interesting to me because that speaks to real demand, not financial engineering. So I think, as Mike has said earlier, we could be in for a pause, here and be normal. But then again, the market is acting very, very well. And so I think that we could be in for a surprise and that the market may not react to some of these negative earnings reports.
Dave, the banks have reacted all over the place over the last 2 days to the various earnings reports we've had so far. What's your takeaway? Were they positive earnings reports, lackluster? What would you describe them as?
Well, I think there's three things I'm seeing. One, that they're telling us that the consumer is still in good shape. Not so good news is that the yield curve is impacting the NIM or the spreads, and I think the last thing is that the lending growth that we have is probably somewhere around GDP growth or below. So I think there was a lot of expectation, pullback before the earnings, which is why the stocks have not sold off that much. But the earnings, I think, are reflecting the fact that our interest rate structure is hurting them, and I think there needs to be more talk about that. But the industry needs to really think long-term about what they're going to do if our rates turn into Europe or Japan.